Now, to help us focus on the fundamentals, the rally we've seen, the historic levels we hit this week, and everything that's going on behind the technicals, we've got Joseph Cavatoni joining us, Chief Market Strategist at North America for the World Gold Council. Joe, welcome. Good to have you with us this Friday. A soft landing, a hard landing, no landing for that matter. You wrote in your notes, in the end, this doesn't depend at all, really, or matter at all for gold. We're on the move higher here.
I think that's right, Ben. You know, you're pointing out the fact that we're hitting these highs. What I think is really exciting about the gold market right now is that historically, when we hit higher levels, demand for jewelry, demand from consumers, even central bank demand may have been less likely to continue to step in. But the signals are that we're seeing that. So we hit these high levels when we know that rate cuts, dollar weakness, all of those factors are on the horizon. And what's really exciting is that we continue to see that support. China and India reported in January continual buying of gold from the central bank reserve portfolios also into February. So these numbers are looking strong. Again, that case is very solid. When we see rate cuts coming, when we see a potential for weakness in the dollar, the investment turn will happen.
Yeah, I want to talk the dollar in a minute because it was definitely influential this week here. On the bigger picture, I feel like gold's kind of deviated a bit from that really well-defined inverse correlation. But just to unpack some of what you pointed to and some of the supporting aspects of what we're seeing here, employment, I think, very strong, right? So that feeds into the consumer, strengthening the economy, and again, the purchase of jewelry and such, as you mentioned, that you can understand why it remains strong. Central bank buying, that's one of the themes we saw into the end of last year, right? One of the predominant themes. Talk to us about what's behind that, right? What's the narrative? Why are they doing that?
There's a strong case for looking at dollar-based assets in their portfolio, diversification, and access to liquidity. Those are the factors that are really driving it. There's also the concerns around geopolitical risks, sanctions. I think that continues to also aid in the support for gold from central banks. But fundamentally, their investment case is not too dissimilar to what you would expect to hear from an institutional or retail investment case. Looking at inflation, looking at the dollar weakness, looking at that diversification that you get when you add it to your portfolio. You know, one other point that we haven't talked about that I think is really, really exciting to highlight as well is that month of March, we've seen a turn in the ETF flows in the U.S. market. We're 1 billion positive in terms of flows. Now, we're getting outshouted by a lot of other categories in the ETF space right now, but pay attention to that because A, the speculators in using ETFs to kind of get themselves covered and short are signaling that they're paring back position back. B, the open interest on GLD, as an example, is indicating net long for the month of April in terms of the options exposure. And C, the sentiment looks like it could potentially be turning. So while we are still negative on a global scale for ETFs and coming off a 3-year run of negative flows, the overall flows in the U.S. are turning positive to 1 billion in the month of March. And it's exciting because this is what people are expecting, which is a change in the Fed sentiment, the signaling of rate cuts, and that investment demand likely to come back into play.
Joe, I feel like when you get a big rally like this, amidst some counterintuitive headlines, right, some counterintuitive fundamentals, that's when it really kind of speaks to the strength in terms of the bulls here. And you mentioned some of the dollar weakness. Let's take a look at this chart here. I've got a bigger picture, longer term chart from 107 down to, well, into the end of last year, down to around 100. But here you can see it's kind of firmed up a bit, right? So it hasn't been that weak necessarily. Yeah, we just came off from 105 back down to 102.50, but here we are basically in the middle of the range that we established last year. Now, so again, kind of holding up to, yeah, a weaker dollar off the highs that we saw last fall, but kind of in the middle of the range of the, range we established last year, over the last year. Now take a look at the dollar here because this week it actually firmed up into the end of the week. We saw it back up to 104, and then it's the dollar index on the right side of your screen here looking at, but look at gold off that all-time high. So you can see that really well-defined inverse correlation in terms of the intraday charts and just some of the price activity this week. Gold coming off all-time highs as dollar firmed back up. But Joe, I want to show you because here we're looking at a longer-term chart, gold rallying off those October lows again, from 1,800 all the way up to this 2,200 level. And you can see, again, here's the dollar just hanging out in the middle of the range. I mean, this really speaks to how the bulls remain in charge here. Talk to us a little bit about what we're seeing on the supply side of things here and how that's playing into this move higher we're seeing.
Well, look, I think supply from the gold market is going to continue to be a steady but very modest growth rate. I think in terms of mining, which is about 65 to 70% of the overall demand that comes into the market, you're going to see about a 2 to a 4% growth rate in the supply. It's a good market for it, but ultimately it's not going to make that much of an impact in terms of the overall pace with which demand is going to play out. Remember, when we do get to these high prices as well, you start to see that recycling of gold come back into play as well. That happens in markets like India in particular. So keep an eye on that. But I think right now, supply is solid, strong. The mining companies are producing. They're taking advantage of the high levels above their all-in sustainable costs. But right now, again, that demand is strong. Now, what you're pointing out between dollar and rates, those have been our headwinds. What we're hearing and seeing is dollar strength on economic data. Fed rhetoric is giving us positive performance against rates and rate cuts. So, lower rates, 8 out of the last 10 rate cutting environments, gold's performed exceptionally strong, over 8% performance in terms of those periods of time. But we get countered by that economic data that continues to say, should the dollar be stronger, should the dollar be weaker? So we're still in that moment of kind of where and how things are going to play out more strategically longer term, but it's all signaling that things are moving in the right direction with that headwind we've been facing.
All right, I like it. Joe, appreciate you joining us here. Those that have been doubting gold have been wrong, right? We've been talking about for a while that longer-term trend to the upside, proof positive price activity we're seeing this week. Who's in charge here, right? We've been pointing out, it seems like the bulls at this point remain in control. Joe, appreciate again you sharing your Friday. Joe Cavatoni, Chief Market Strategist of the North Americas at World Gold Council.